Bitcoin ETFs offer a regulated investment avenue into Bitcoin without requiring direct cryptocurrency ownership. Bitcoin ETFs provide an accessible method for investors to gain exposure to Bitcoin's price movements. Investing in Bitcoin ETFs offers the benefits of traditional financial regulation and oversight. By 2025, regulatory frameworks surrounding Bitcoin ETFs are expected to evolve significantly. Key regulatory bodies will play a crucial role in shaping the investment landscape for Bitcoin ETFs. Specific rules and guidelines will impact the accessibility and risk profile of Bitcoin ETF investments. Investing in Bitcoin ETFs requires a brokerage account. The initial step involves opening an account with a brokerage that provides access to Bitcoin ETFs. Funding the newly created brokerage account is essential for trading Bitcoin ETFs. Thorough research is crucial before investing in Bitcoin ETFs. Expense ratios are a key factor in evaluating Bitcoin ETFs, impacting overall returns. Tracking error and assets under management are important metrics for assessing ETF performance and stability. Bitcoin ETFs can be structured in various ways, including physically backed and futures-based models. Physically backed ETFs hold actual Bitcoin, while futures-based ETFs invest in Bitcoin futures contracts. The structure of a Bitcoin ETF has implications for investors, affecting risk exposure and potential returns. Analyzing current market trends is essential for timing investment decisions. Bitcoin's price movements are a key factor in assessing market conditions. Technical analysis and market indicators provide insights into potential investment opportunities. Various providers offer Bitcoin ETFs, each distinguished by its reputation and management approach. Assessing the credibility of ETF providers involves examining their historical performance and management stability. A provider's track record is a crucial factor in evaluating the potential risks and returns of its Bitcoin ETF. Expense ratios can significantly impact investment returns. This module explains how to interpret expense ratios. Expense ratios across different Bitcoin ETFs can be compared to make informed investment decisions. Liquidity refers to the ease with which shares of an ETF can be bought or sold. Trading volume is a key indicator for assessing the liquidity of a Bitcoin ETF. Higher trading volume generally indicates greater liquidity, allowing for easier and faster transactions. The initial step involves selecting a Bitcoin ETF within the brokerage platform. After selecting the desired ETF, the next step is to initiate a buy order. The final step involves confirming the order details and executing the trade. Different order types, such as market orders and limit orders, are available for buying Bitcoin ETFs. A market order executes immediately at the best available price. A limit order executes only when the price reaches a specified level. Order placement initiates a transaction that requires a settlement period. The settlement process involves a series of steps to finalize the transaction. Understanding the settlement process helps manage expectations regarding transaction completion. Investing in Bitcoin ETFs can have tax implications that investors should be aware of. Gains or losses from Bitcoin ETF investments must be reported on tax forms according to applicable regulations. Understanding the tax consequences associated with Bitcoin ETFs is important for compliance and financial planning. Investing in Bitcoin ETFs carries inherent risks, including significant market volatility. Regulatory uncertainty surrounding Bitcoin ETFs represents another key risk factor for investors. Effective risk management strategies are essential for mitigating potential losses in Bitcoin ETF investments. Diversifying an investment portfolio can effectively reduce overall risk exposure. Bitcoin ETFs can be strategically incorporated into a diversified portfolio to enhance potential returns. Optimal asset allocation balances risk and return, tailored to individual investor profiles and financial goals. Stop-loss orders are designed to limit potential financial losses in trading. Setting a stop-loss order involves specifying a price at which an asset is automatically sold to mitigate further decline. This module provides instructions on how to set stop-loss orders specifically for Bitcoin ETFs. Regular monitoring is crucial for effective investment management. Tracking the performance of a Bitcoin ETF allows for informed adjustments. Adjustments to investment strategies should be made based on performance data. Rebalancing a portfolio helps maintain the desired asset allocation over time. Portfolio rebalancing involves adjusting asset holdings to align with long-term investment goals. Bitcoin ETFs can be incorporated into a portfolio through strategic rebalancing. Investment strategies should align with specific financial goals and time horizons. Long-term investing in Bitcoin ETFs typically involves holding assets for several years to maximize potential returns. Short-term Bitcoin ETF investments aim to capitalize on market fluctuations over weeks or months. Bitcoin ETFs can exhibit significant price volatility. Understanding volatility is crucial for managing risks associated with Bitcoin ETF investments. Effective strategies exist to manage volatility when investing in Bitcoin ETFs. Dollar cost averaging helps reduce the impact of market volatility on investments. Dollar cost averaging involves investing a fixed dollar amount at regular intervals, regardless of the asset's price. This strategy can be applied to Bitcoin ETFs to mitigate risks associated with Bitcoin's price fluctuations. Staying informed about the Bitcoin ETF market requires continuous monitoring of news and developments. Up-to-date information is crucial for understanding market trends and making informed decisions regarding Bitcoin ETFs. Monitoring news feeds provides insights into regulatory changes, market sentiment, and other factors influencing Bitcoin ETF performance. Awareness of potential scams and fraudulent schemes is crucial for secure Bitcoin ETF investments. Due diligence and thorough research are essential steps to avoid investment scams. Employing security best practices helps protect against Bitcoin ETF investment fraud. Seeking advice from a qualified financial advisor is a prudent decision. Financial advisors offer expertise in managing and optimizing financial resources. Working with a financial advisor provides personalized strategies tailored to individual financial goals. Investing in Bitcoin ETFs in 2025 requires careful consideration of key steps. Thorough research and diligent risk management are essential components of informed decision-making. Making informed decisions is paramount when investing in Bitcoin ETFs.